let's talk about branded residences in Asia. Now, when we're talking about, this is a $30.7 billion pipeline coming up in this marketplace. It's an important economic indicator. I think that's really interesting as well. 38,000 units coming in, a lot of properties, 178 properties. Thailand for the moment is number one, but as we're going to learn later on, things are changing. It's a competitive thing around Asia as well. And again, when we're looking at the rampway going through 2027 beyond 2028 as well, there's a lot of pipeline projects coming. So we're seeing more and more branded residences projects being announced and also being developed in many countries across Asia. Something that's interesting also, and we do understand geography, okay? So we're talking about Asia today, and you'll see the Maldives, you say, what the hell is the Maldives doing there? Maldives is close to Asia, okay? It's a good indicator as well. India, of course, is South Asia, so that qualifies as well. We're not trying to do a Gulf of America, rewriting the map. We're saying that the Maldives, for our context, is within this comp set. But when we look at what are the top markets in Asia by market value, when we dissect 30.7 billion, we're looking at Thailand still remains a leader, okay? The Philippines, right? Gotta love the Philippines. Philippines is an important branded residences market. Filipinos buy branded residences as well. It's a great indicator. Korea. We're going to talk about Korea because Korea is an entirely different market as well. And of course, Japan is on the rise and Malaysia as well. One thing about this report, so if you see the data today, you can stop by our booth as well and pick up a new copy of our new report. So everybody's going to be receiving our data today. When we look across, what's the future, okay? That's even more interesting about what are things stacking up when we look at the future pipeline projects where things are stacking. And we're looking at it, interesting, we see Vietnam. Vietnam is rising. You know, Vietnam a few years ago, they had some issues with public companies and everything else, but we're seeing more and more development in Vietnam go forward. We're seeing, you know, with the government there, we're seeing the government's actually come in and reducing the number of provinces. They're reducing bureaucracy. The number of international airports in Vietnam are substantial. And we're seeing long-term visas as well. We think Vietnam certainly is a tiger, certainly for 2025 going forward, is a great storyline for Asia for branded residences. It's on the way up. Thailand continues to be interesting. India. India is another cornerstone market we're seeing a lot of interest in. We're seeing the big developers going to say, we're doing branded residences. You're able to sell both urban and resort properties. One thing interesting thing about India, with all the thousands of kilometers of beaches and oceanfront property in India, you've got Goa, that's about it. So there is potential upside of that market as well. But coming through the markets as well, again, Vietnam, we were talking about earlier. Japan continues to be an interesting market as well, and China. China is still there, and people say, what would happen if you do new branded residences projects in Shanghai? Markets like these will come. So again, there is upside across all of Asia in terms of these marketplaces. Pipeline supply, 4% non-hospitality. Let's talk a little about that because we talk about luxury being the only thing. Let's talk about non-hotel brands. And I know we started KP Ho before talking about it's all hospitality, all hospitality. Contrarian view to that would be that if you have a fashion brand, you have an automotive brand, they can give you limited editions. What's better at luxury level about buying a mass quantity hospitality brand versus a Fendi or another automotive, a Porsche? You know, looking about what kind of limited editions, how that speaks to a luxury buyer. Too often branded residences, you talk about products, but talk about the consumer. Talk about who the buyer is and what their value-based system is. You know, if you're buying fashion or something else, go to a mall and look who's on the cornerstone units, the most expensive real estate in that mall. It's going to be the bigger brands. So I think something we know about hospitality today is hospitality in Asia. We're seeing every hotel company virtually would be gladly give you a franchise, gladly give you licensing deals. They just want to expand their earnings. They're listed companies as well. But at the end of the day, it's about licensing and franchising as well. This is where fashion, this is where automotive brands play into this. And we think that's an intriguing space because, again, you're able to do things you can't do with hospitality. So again, we're going to see more and more of these entries into the marketplace. And there is a question about who's going to be providing management. That's still a blank space. But as these companies define themselves, they're also able to address a very ultra luxury consumer type. So we believe that that market share is going to continue to grow, probably even somehow faster than hospitality as well. And again, luxury game as well, we're seeing as we go through upper upscale. A few years ago, if we'd go back to the mass market, if we talk about Asia, one thing we understand in Asia, a key indicator of real estate markets, whether they're in Thailand, whether they're in the Philippines, whether they're in Indonesia, is when you start getting small, cheap condos in a marketplace, that means you're in a marketplace which is at the top of a cycle. You're coming back through that. So we think when you're talking about the surge in mid-scale, perhaps branded residencies, that's going to take a seat back until we get through another real estate cycle. And going on again, when we're looking at branded premiums are interesting because branded premiums, urban markets are completely different than resort markets, okay? The key about an urban market is underlying land cost. Underlying land cost could be 20%, could be 50% of a project, could be even higher, in certain key CBD areas as well. Resort markets tend to be cheaper, so pricing premiums. It's impossible to say that pricing premiums are a certain level because every project is different. When did the buyer buy the land? What's their land basis as well? What's going to be that basis as well? But generally, we do see in terms of premiums across certainly higher in the resort markets than we're seeing in urban markets. But there are other views to that. If you come here to Bangkok, you see the Porsche, which was a Porsche design tower. The pricing virtually doubled what comparable products were in the luxury market. They're able to do that with pricing premiums. If we go to what Aman did in Tokyo as well, we certainly saw those pricing premiums, which drove higher than the averages as well. So we do see fluctuations about that. So it's not a magic number, but it's an important number, but it's driven by land cost. It's driven also by innovative designers who want to do something different as well. But certainly in terms of the pricing points across things, we are still seeing growth. And also, what this doesn't talk about is sales pace, absorption rates as well. The one indicator we have for many of these branded residence projects is within a selling of a certain project, within the different unit types, you're seeing different strategies. You're seeing many entry-level products are the first ones to go out very quickly. If we go to the Standard, which was sold in Phuket, we saw the smaller, cheaper units go quickly. But that establishes momentum in a project, and later on, you're able to address pricing premiums. So the true pricing premium is the money you're leaving on the table by having phase 2, phase 3, phase 4 of a fast-paced project and being able to increase your pricing 15 to 20% during a sales cycle by having momentum. And that's something which we don't often talk about for branded residences, but should be. We have the same thing for branded residences in resort markets in terms of super pricing. If you're going to Bali, if you're going to Phuket, you're going to other resort markets, not every piece of land is created equal. Not every villa would have the same view. The ability to super price certain products and create better pricing premiums for better products as well are a key indicator. This is often overlooked in the resort markets as well. But being able not just a premium, but being able to have pace in a project and increase your pricing over the term of a project. Key value as well. And when we're looking about the key markets, again, Vietnam, we are optimistic. Vietnam is becoming a real competitor for tourism. Tourism also, many times for tourism in the resort markets, you come as a tourist, but you buy real estate over time. You know the location. And that's something key indicator. If you go to Laguna Phuket, certainly over the years, I think about 50% of their buyers have stayed in Laguna Phuket over the years. It gives you a base. They may not buy it the first time, the second time, but they're learning about the location. And Vietnam, it does have a key pricing point in terms of its real estate as well. So we think this market is really robust moving forward, and we understand the problems as well, in the past with the larger companies, but there are certain things. The only issue in Vietnam is the weather. And I think KP touched on that earlier on. The one thing about Thailand is whenever it starts snowing in Eastern Europe or Northern Europe or these areas, we're going to get snowbirds who are going to come to Asia and want holiday homes. Vietnam does have a challenge in central Vietnam and the central coast, in northern Vietnam as well, towards the weather. So it's not always a comparable, say, you're just going to take over the Thai market with Vietnam. Phu Quoc, of course, in the south for the resort market, has similar weather to Thailand as well, so it does fit into that profile. Thailand, what's happening in Thailand? Thailand has some issues with branded residences, quite frankly. There's an issue with hotel licensing. And right now, it's virtually impossible for a condominium to get a hotel license in this country. It's very difficult. It's not impossible. Everything's possible in Thailand, as close followers will know. But getting hotel license. So if you're selling a project, branded residence, and want to offer rentals and don't have a hotel license, you have a problem. So we're seeing developers all of a sudden say that we can go into a project, we can offer long-term rentals, 30 days and above, or we can sell you a branded residence and you can live there, but you can't necessarily operate as a hotel. This will probably, it's perplexing hotel operators right now how to address this because they want to sell. They have developers who say, we want to do branded residences, but if it's an investment buyer. And the one thing that we know that the resort market, certainly for this type of properties, a resort buyer is different than an urban buyer. An urban buyer is motivated by logic. They understand yields. They understand mortgages, perhaps. The resort market is motive. You have a great holiday, you have a great margarita on the sunset, I want to buy a property. The amount of people we get who fall off the boat and think, this is something we want to buy immediately, not doing due diligence or anything else. Different buyers, different motivation. So again, that's always close to when we talk about the resort markets across Thailand. Philippines continues to baffle me a little bit because Filipino developers don't have nerve to do ultra luxury, right? Amanpulo is 30 years old. It was the first ultra luxury project in the Philippines. It continues to be a benchmark of ultra luxury there. But yet you have Filipino developers who continue to develop mid-scale products for overseas Filipinos. 11 million, 12 million overseas Filipinos living abroad, buying property as well. But why don't people do ultra luxury? That said, there is a marketplace in that country for that type of property. Malaysia continues to go on. India, again, is an interesting story because we're seeing more and more as the property cycle is cycling up doing luxury properties. And I think right now we're going to see in the next 24 months, India will be amongst the fastest pacing markets in Asia for branded residences. Really, really interesting. So I think kind of going through things today, I think what we understand from our view is, again, you can stop by, you can get one of our market reports, or we're also going to be emailing it out to people who attended the conference afterwards. But I think across Asia, we understand where are we going next. And as Jonathan's saying, what are the biggest challenges out there already saying? My biggest challenge still is, actually, I wish there were more Bill Barnetts because we're busy. We do see niches across Asia market. We do see growth. But again, when we're talking to developers, the one thing we have to understand is for branded residences, it's been a very traditional trajectory. And I think what we're not doing well is going to developers and saying, if you dissect a project, aside from having a hotel brand, what's unique about the real estate offering? What are the top 5 USPs? What do you offer something? Select to that. What are the things why you're buying this property and not another property? I think those are things which this industry doesn't do well in creating real estate value, or creating resale value as well, and doing these things. I think as the branded residences market comes through the cycle, we're going to see it closer to real asset cases. But imagination. Great projects are done by great developers. The brands help. The brands put a logo on it and everything else, but a developer has to have foresight. It's not a matter of taking statistics and saying, this is the marketplace, build a 200-key condo with 46 square meter studio units. It's a matter of saying, what would be the next thing? What could you do? You go to the Four Seasons in Kyoto, nobody saw that project being that successful because it resonated with other people as well. We worked in the Park Hyatt Niseko, and people said, would Japanese? No, Japanese won't buy in Niseko. This is a foreign market, right? Over 40% of the buyers were Japanese who bought entry-level product, but they bought real estate in a resort market, which was something new to them. So I think as we said, as this market evolves, it's the brave developers who don't just follow the market who are creating new ideas out there as well. So thank you very much. It's an exciting time in Asia for branded residences.